Hi everyone, so today we'll be doing a stock analysis on Transocean. The ticker is RIG and it's a drilling oil and gas well company. Let's get started. Quick disclaimer, I'm not a financial advisor and I'm just doing my own little research. Up to you to make your own decision. Quick summary, so let's start with a company profile, then a fundamental analysis, then technical analysis, then look at the price where it would go in the next few weeks, years, and then go with a conclusion to wrap it all up. So let's get started with a company profile. The company has been founded in 1953. It's been trading in the New York Stock Exchange, so in the United States, and it's based in Switzerland. So the company provides offshore contract drilling services for oil and gas wells worldwide. It contracts mobile offshore drilling rigs, related equipment, and work crews to drill oil and gas wells, and operates a fleet of mobile offshore drilling units consisting of ultra-deepwater floaters and harsh environment floaters. So just this is a very quick idea of what it does. I try to go a little deeper and so that you guys can understand a bit better what's that. So to make more sense out of it, let's look at what offshore drilling is. So it's a mechanical process where a well bore is drilled below the seabed. It is typically carried out in order to explore for and subsequently extract petroleum that lies in rock formation beneath the seabed. So what I understand out of that is that the seabed is there, so it's basically the ground up, like under the water. Then we have a driller there to potentially extract petroleum. So the same goes here, and there's two kind of like way to extract. So one is looking like a floater and the other one looks more like a ship basically. That's about it. So this is a slide I found in one of their presentation that they've had, and I thought that was quite interesting because like it shows that Transocean is actually one that has the most contract out of all the like companies out there. So as you can see, that's the one in light blue in there on like that. So you can see that there is contract until basically January 2026, nearly very close to 100% when you compare to their peers. Like they're more down, so that's good, but at the same time it could be bad if the price of oil start to rise significantly and then like their pricing is fixed. So we'll explain a bit later, but it means that they can't really get paid above until 2026 or like later. So that's something to consider. So another thing I noticed in their presentation is the fact that the company has the highest specification fleet in there. So compared to its peers, they have like the basically all the percentage there is what they have compared to all the peers. So that's good. So I was looking a bit at around X, and I found that there were like a really good tweet from Tommy Deepwater. So it gives a industry insight. So I won't go into that, but you can have a look yourself by looking there for this name. So Tommy Deepwater, and what I wanted to show is mainly like the basically all the competitors. So there's like Transocean is pretty much the leader with 21.8% market share, and then there is like Noble, Valaris, and Seadrill. So all the other are like I won't mention because they represent over 50%, like 60% nearly. So I thought that was interesting to see that there is four major like leader, and then Transocean is the first one, which I find quite good. So another thing I noticed is the industry pretty much all the companies in the industry went bankrupt. So the only company that didn't go bankrupt is actually Transocean, which means that they have a lot of debt. I mean, we show you guys later, but Valaris, Seadrill, and Noble, they all went bankrupt right after the oil crash in 2020, and they basically all went bankrupt around 2021. And I thought that was very interesting. So the advantage is to show that Transocean is more resilient, but at the same time now the competitors, because they went bankrupt, they don't have any debt, so they are a little bit more safe in that sense. But at the same, they are more well priced. That's what I noticed. We have here the rumors to merge Transocean and Seadrills. So I found that quite interesting when I saw that news. It happened on the 25 October 2024, and I thought that would be quite an interesting merge, because that would actually make rig the market leader with a potential merger of 30.7% between the two. One thing to consider as well is that Seadrill went bankrupt already, so their financial statements looks amazing. They have more cash than debt, and I would say with rig having more debt, it would actually balance the company and make it more give more strength to it. So, and the 30% merger could means that there is less competition, and then the rig will have more ability to increase their pricing for the lease of their equipments, and I'd say that would be a very good thing. So let's see how it goes. That would be good. So let's now look at the fundamental analysis, because I went to describe a bit the company and what's going on a bit in the industry, but now I want to mention how the company looks like. So the market cap is 3.9 billion, so I would say as usual not very big company, but big enough. Their trading P is not very good, doesn't have anything in the past 2 years. So they've been repaying debt, and that shows in there that's why they're not really profitable. Their forward P looks 17. I mean, it doesn't look very good either, but one thing that I really like is just the fact that the price to book is very, very low. So even though they have debt, their equipment is worth a lot more, and the company is really undervalued compared to their equipment. That's about it for here. So this is Yahoo Finance highlights. So I wanted to show mainly what I noticed that was a little bit concerning is the high debt. So nearly 7 billion for the market cap of nearly 4. I'd say it's a lot for sure. I will show you guys next that it's been getting better, but still looking quite high. Then the next thing that is always good is the insider, which are 17% ownership. So I've seen that insiders have been buying recently, and one insider seems to be over 10% from what I've seen, and then the institution are backing up as well with over 70%, which means that people that they know that the company is interesting, I guess, to have that such a high institution. So they've done their due diligence, I guess, but at the same time it's concerning to have that much institution, because they could manipulate the price. Yeah. So looking at the Yahoo Finance balance sheet, I could say that in here you can clearly see that the debt has been going down. So it went from in the last few quarters, so it went from 7 to now 6.5 billion. So it is on the right track, and at least they have better contracts now that has a higher lease. So I know they're making more money, so they should be able to pay back the debt in the next year and two. But I would say it's not high enough, in my opinion, to really reduce it to 1 or 2 billion per year, which would be ideal. So this is something to monitor because it can change in few months, but at least it's on the right track. So let's look at the technical analysis now. So there is a direct correlation between the oil price and the stock price. So as you can see, when the prices of the stock has been rising, the oil price in purple has been rising too. But then when the oil price has been going basically doing nothing, the stock plummeted, literally. So I would say that this is literally an exponential kind of bet on oil. So if oil, as you can see, the price now is way down. So if oil start to rise very fast, quickly, we may expect the price of the company to go back up quite significantly. But at the same time, if the price of oil goes down from here, we shouldn't expect much, if not even price will go down. So here is the stock chart on the weekly. So as you can see in there, before 2020, it's been pretty much going down, and then since 2021, 2022, it started rising a bit, but I would say it's still it could be a continuation of that trend because of that pivot point here. So it's not even taken that one. So we could say that it took that one, but at the same time, I'd say to be really safe, we would say that above $9 could be a really proper shift of structure. So and then now it's been going downhill, and basically there's nothing shows that it's coming back up. But let's see how it goes in the next few weeks. I would say that, to me, if the oil price rise in the next few months, there's a high chance that rig will follow, especially if their contract are still there and they continue to have to lease all their equipment. But if they don't, and they have problems, or just there's a massive problem worldwide and oil is not used anymore, then that stock will struggle. That's pretty much the whole summary of it in terms of technical, how I see it. So to conclude, I'd say the big advantages are the fact that there's not that many competitors, and the fact that rig is the leader with 21.7%, and potentially with a merger it could get to 30%, but nothing really is there yet, so we have no idea. And it's got the best contract, so it's companies go to them first before going to competitors, which is a good sign. The only company as well that didn't go bankrupt, with other peers that have higher industry percentage. So I would say this is a good thing in a way, but at the same time they have a little disadvantage because of the debt, and the insider ownership is quite high, I would say, which is good, and institutional ownership too, good and bad, but mostly still good thing. And the risk, I'd say the technical analysis is alright, but I'd say the short term is not very good, and overall it still doesn't look like a very uptrend, still look a bit bearish in my opinion, and there's a lot of debt, and that's not very good. So I hope that helped you guys to understand better the company, and I see you in the next video. Thanks.